When Finance Minister Nirmala Sitharaman presents the Union Budget on February 1, the defense budget will once again be under close watch. Not just for how much money is allocated, but for how effectively that money is spent. Let's start with the bigger picture. Over the past decade, India's defense spending has nearly tripled in absolute terms, from about 2.3 trillion rupees in FY15 to an estimated 6.8 trillion rupees in FY26. But as a share of the economy, the trend tells a different story. Defense spending has steadily slipped from around 2.3% of GDP to about 1.9% today. That gap between rising rupee allocations and a shrinking GDP share is what shapes expectations for Budget 2026. Brokerages broadly expect a double-digit increase in the defense budget for FY27. Motilal Oswal models a rise of around 15%. Morgan Stanley also pegs the increase at 12 to 15%. HDFC Securities expects 8 to 10% growth, while Nuvama projects a similar range. The consensus view is clear. Defense spending will rise. The question is by how much and where. The real focus is capital expenditure, the money used to buy ships, aircrafts, missiles and armoured platforms. Defense capital allocation has already climbed from 949 billion rupees in FY19 to a budgeted 1.92 trillion rupees in FY26. For FY27, estimates range between 2.1 trillion rupees and 2.3 trillion rupees, implying growth of up to 20% year on year. This is where modernization comes in. Senior defense officials have indicated that the modernization component alone could see annual growth of around 20%, well above the long-term trend of about 10%. From a FY26 base of roughly 1.49 trillion rupees, this would take modernization spending close to 1.8 trillion rupees in FY27. Crucially, 75% of this spending is earmarked for domestic procurement, a rule that has not only been met but exceeded. In FY25, nearly 88% of defense contracts by value went to Indian suppliers. But this is also where expectations run into constraints. Higher procurement alone does not guarantee self-reliance. The weakest link remains defense research and development. India spends less than 4% of its defense budget on R&D. By comparison, the United States spends around 17%, China about 15% and South Korea 17 to 18%. In absolute terms, the gap is even sharper. India spends roughly $3 billion a year on defense R&D, compared with about $140 billion in the US. Even the government's 2022 promise to earmark 25% of defense R&D for industry, startups and academia has not fully translated into execution. The main reason has been the absence of clear funding mechanisms. Industry now wants that idea revived, but crucially outside the DRDO's core budget rather than carved out of it. There are some signs of movement. The IDEX framework has already generated defense orders worth over 2,400 crore rupees for startups and MSMEs. A new 1 trillion rupees research, development and innovation fund promises low or zero interest capital for deep tech projects, and industry wants defense to receive a dedicated share. The core demand is straightforward. Treat private industry as a full pillar of defense capability, not just a vendor. So as Budget 2026 approaches, the question is no longer whether defense spending will rise. The real question is whether more of that money will flow not just into buying equipment, but into building the technology that will define India's military future.